Wealth and Wisdom live show. We have a fun little episode today. Main question that we are going to be talking about today is stock markets have hit record highs while headlines are screaming danger on the horizon. So, what we're asking today is why hasn't the market blinked despite multiple red flags? We're also going to be talking a little bit about some big IPOs coming up. And as always, we have a guest here to talk through this with us, Mr. GhostAlpha. I don't know much about you because I couldn't find you. I tried to sneak around and do some stalking, find your LinkedIn or something, but I couldn't figure it out. So why don't you tell the audience about yourself and let them know who you are?
Yeah. Thanks, Tyler. I appreciate you having me on today. And my name is George Orlando. That's probably why you didn't find me. You can't find me under GhostAlpha quite on LinkedIn, but I run the GhostAlpha newsletter. Been trading mainly in growth stocks since 2010. Had a chance to work under William O'Neill, one of the greatest growth investors of our era, back in 2013. And, working there and reading his book changed my life. And I've been absolutely addicted to this game of trading growth stocks ever since. So really excited to connect with you, Tyler, talk through some of the stuff that's going on in the market, especially some of the crazier stuff we got going on too.
It's a little bit absurd, I have to be honest, but I am very, very excited. And the thing is, your experience resonates with me just a little bit because that's what my father, when he was in his undergrad and MBA program in Indiana, that's what he was focused on when it came to stock research. Like me, he always dreamed about going to Wall Street, and he did 2,000 hours of stock research on growth stocks. That was kind of his whole gig. I'm more value now. I'm a little bit of growth in terms of like what's rolling down the pipe, so VC, that kind of stuff, but very, very interesting. Okay, we're going to jump right into this. Actually, we're going to get started. Let's talk markets.
Yeah.
So just a little bit of a couple of key points here that have come up recently in the news that I wanted to bring up. Since the Strait of Hormuz closed, WTI crude is now trading at $90 with a peak at the top of the range of 138 per barrel. Right now, according to Fitch, U.S. private credit default rates hit an unprecedented 6% in April, which is much higher than the historical average. Consumer defaults are at a 14-year peak of 12%. And CMBS, so commercial real estate mortgage-backed securities, have hit a 12% delinquency rate. Not to mention, long-term yields, 10-year, 30-year, are all rising. 30-year hit 5% recently, the highest since 2007. What the frick is going on? I have to admit, now, as of like last week or 2 weeks ago, it seems like more mainstream financial news are like, hey, are we at a peak of a bubble market here? But, for the last 18 months, I've been pounding the table about that as more and more bad news came. I mean, look at all the revisions we had in the job reports. Yeah, sure, JOLTS came out with a good number for the last month, but based on the pattern we've been seeing, it's going to get revised in 6 months anyway. So I don't trust it all that much. But no one seems to, pardon my French, no one seems to have given a shit. They didn't care until the 30-year rose. So what is going on here? What are your thoughts?
Yeah, no, it's really interesting. It's funny because I keep thinking about when I was over at William O'Neill, I had a mentor there named Scott St. Clair, who I sat next to, and he's pretty well known, like the IBD kind of network of traders and investment research. And I remember him telling me, he goes, because he got to trade the 90s.
Mm-hmm.
And, I was born in 86. I didn't get to trade the 90s. So he was telling me, he goes, George, he goes, when the sentiment is one way and the charts go the other way, that's where you make the big money in the market. And I remember in March, I was so almost like really depressed about everything that was going on with Iran and, you name it, just the wave of just terrible news coming out. And at some point, because I'm always watching the market, I'm always watching the indexes, I started to see the divergence. I started to see like a little bit of support towards like the middle end of March. And I text my buddy Ryan and I said, hey, Ryan, I think there's something going on, like there's sentiment is really bad right now and the market doesn't care anymore. This could be the bottom. And he told me, he goes, no, there's no way, we're going to tank. And when he said that, I knew it was the bottom. I knew it right away. So then we had a follow through day on April 7th was the follow through day on the NASDAQ. And I was kind of getting in buying stocks a day before the follow through day, and it's worked out really well. The market's kind of rallied since then. So I would say where we are now is it's almost healthy to have these kind of negative sentiments in the market right now if you want it to continue to go up. The markets are always going to move to disappoint the masses. And right now, the way to piss people off the most is to go up, And I think that once we reach kind of a euphoria, and the way to piss the most people off is to go down, that's what the markets will do, because that's what she does. She's mean. Okay. I think that you always need a boogeyman to have a healthy bull market. The yield rates, the price of oil, obviously a lot of competition for equities in these rising. I was really worried about the yield rates. I was pulling up TLT, watching those levels, and we came off the highs, particularly this week, which is good for equities. But you need boogeymen, or else the market won't go up.
That's a really interesting phrase I haven't heard before, and I appreciate it because, by the way, Keegan Hadley, thank you for joining the live show. If you have questions, feel free to drop them in the comments, or comments, jokes, whatever, and we'll interact with them. So back to this boogeyman comment. I don't know, George, if you have spent a lot of time listening to like CNBC News or whatever. I try to listen to 1 to 2 hours of financial news and analyst content every single morning. It's just part of my routine. And one of the things I noticed from the not so independent analysts, so we're talking CNBC, Reuters, and the FT are better, but CNBC, Fox News, those guys, it's just kind of boring. You ask them, why hasn't the market come down with everything that's going on? And it's usually something about, passive flows, which I think does matter, or comments about AI earnings. In fact, when I had AI help me write this outline that we built together for this show, a lot of it was about AI earnings, which just kind of made me roll my eyes a little bit. But no one's ever explained it like that, which I think there is some real, like, Kahneman style behavioral economic stuff going on with that, of people kind of pushing against the narrative. You hear about this all the time. If I don't know if you have kids, but I heard this growing up. I'm about to have my first kid, and so now I hear it all the time from people in my church group, in my neighborhood. It's like, if you really want your kid to do something, tell them not to do it. And I feel like there's definitely some vibes there, because what we're experiencing in terms of, for me, I'm always looking at like economic fundamentals here. What we're looking at in terms of leading indicators, it's bad.
Yeah.
I mean, I was talking with my father about this on Memorial Day. There are several places around the United States, urban metros now, that are selling their largest office towers for the price of land plus cleanup. They're selling it for scrap, which is not good. Now, who knows? Zoom exists now, so there's definitely the rules of the game have changed a little bit, but the mortgage-backed security market is massive. It has a major, major effect on where interest rates go and where the market goes. So, but there always has to be a boogeyman. That one's kind of interested me. Have you seen that pattern appear before? I mean, you said you've been trading for a long time now. Have you seen this, like, oh, there's a boogeyman coming up, 2001, 2000? I don't know when you started, but walk me through that a little bit.
Yeah, I'm trying to think off the top of my head. There's always kind of a balance of sentiments, right? So you have things like the CNN Fear and Greed Index, and
Right.
those type of indicators are super helpful with that. But generally, what I like to do is go on like X, or somewhere where traders are actually talking, and I want to see what they're saying. I want to see what stocks they're looking at, so I could avoid those, right? Because again, back to the whole concept of the market moving to disappoint the masses, they're typically going to be wrong. The crowd is usually going to be wrong. So I try to look for different areas on where the crowd is. I mean, I think when I think about it, the whole COVID thing, and the fear and that bounce that we had, off of the COVID lows, I mean, you had people thinking the world was over, right? So once you have
Right.
sentiment roll over that hard, it's time to look at the charts. So for me,
Mm.
when I invest, I'm buying off fundamentals as well. I only buy companies that have triple digit earnings and sales growth, positive return on equity, healthy pre-tax margin. I want growth companies from a fundamental perspective. But in terms of where I buy it, where I make my entries, and where I most importantly exit the stock is through the technicals, just through price and volume.
Right.
So once those two things kind of line up, that's how I'll make my decision. But when I'm building my thesis and in terms of, you know, where we're going to head in the market and build up that confidence, really, I want to see, I want to take almost a bit of a contrarian approach to the way I approach, you know, buying and selling stocks.
No, for sure. By the way, Traders Pro and Dan Prudhomme, thank you for joining the live show. I really need to get like an automated bot to say this, but if you have questions, drop them in the comments and we'll answer them. You know, George, something that I don't know why this popped in my head now, but it's something I try to live by, especially when it comes to investing. And I'm not a professional investor by any means. I just kind of do this stuff for fun. But something that I heard from the founder of Kickstart Fund here in Utah. They're one of only a handful of pre-seed funds here in Utah. They were the first. One of the things that he taught us when I was in my undergrad was the fact that it's not enough just to be contrarian. I think this points to we're talking about how do we get in and get out of this. Um, you have to be contrarian and right.
Mm-hmm.
YouTube's full of people who are contrarian. I've been contrarian on some of this. Um, but it doesn't matter if you're contrarian and wrong.
Right.
You know, and I hate to say I'm going to be a little vulnerable on this, but I learned that the hard way because recently, for kind of my own like side hobby trading, right? It's nothing too big, just like a fun money account. But
Sure.
I recently started using the Ben Graham formula as the base for my model,
Oh,
and
cool.
I I it's so much fun. Like I even vibe coded a tool that will do it for you. All you have to do is
Amazing.
literally, all you literally have to do. I'm sorry, I'm gonna hop off and I'm just gonna brag on this. So this took me like a couple weeks to get it dialed in, right? But now all you have to do is literally Google a ticker and Google the corporate yield, and you're good. You know, you tweak the settings based on your margin of safety and how risky you are. That's it. It will run the valuation for you. It has tools to track your stops. It has tools to track your exit. It tells you when you did the trade. It's awesome, right? I
Isn't that
guess
crazy? I'm sorry, Ty, I had to cut you
no,
off,
go
but
for it. Go for it.
I've built a career in SaaS. Like went into tech. I worked at Oracle, and it's how I ended up in Austin.
Mm,
I was, you know, in Los Angeles working for William O'Neill, or at William O'Neill and Company, and then when I moved to Oracle, they built out this huge headquarters in Austin. I said, let me check it out, and that's kind of what landed me here. But man, you can build a SaaS by accident. You know, I was working with Claude, and I was like, hey, like help me with my trading, because like having a trading coach, and not so much
mm,
to tell you what to do. I don't think that's, I don't know if that's going to be the future, maybe, but someone to keep you accountable to your rules. You know, for so long we haven't had that, right? You don't have somebody to
right.
tap you on the shoulder and be like, hey, George, you know, you're oversizing breakouts, which is what
Maybe
my,
if you're at a trading desk, but
yeah,
you know, if you're
exactly.
not
But
working at Citi,
100%. But if you're, you know, like you said, trading for yourself and you're an individual investor, we didn't have that before. But
no.
now I asked it for some type of analysis, and it built me like an Airtable. And I was like, I'm worried for SaaS. I think that there's going to be and continue to be big winners and big losers in the SaaS space. You
Mhm.
see companies like Twilio, with full disclosure, I have a position in Twilio, where they're making AI work for them. Companies like JFrog, companies like DigitalOcean, like these are AI
Yeah,
first SaaS companies
yeah.
that are making it work. But then you see the other end, they're just getting decimated because of what you said. You were just able to build out a platform on a whim. Now imagine in an enterprise, right, where you have a CIO, a CTO with development teams, right, and how easy they could spin up something for XYZ business unit.
Mhm.
It's to me, that whole, I don't want mean to go off on a tangent, but it's a fascinating development with the AI space, that assault on SaaS.
No, absolutely, and we can talk. It's connected. We're going to talk about this. We're gonna take a turn here. We've talked about this a lot on the live show so far, but a little bit of background. I'm a product manager. I've been working at a startup
Oh,
for two and a
cool.
half years. We started with 6 developers in India. I was on phone calls. See, I've been a product manager now officially for almost a year. I was a business analyst before that. And I was on the phone 3 nights a week, and the CEO was on the phone 2 nights a week at like 10:30, 11 o'clock at night. Sometimes we'd go till 1 o'clock in the morning doing grooming, doing, stand-up sessions, answering questions, getting development updates, right? That was the world of SaaS, and that was kind of the moat that they've had for 20 years.
Yeah.
Um, Now that we're using AI, we had an architect reach out to us and tell us, "Hey, I can build your entire software." And we're mobile first, so it's not like it's not like building a bank software, which takes forever. Um, but we're mobile first, and he reached out to us and said, "I could have like built your app in a couple months," which is crazy considering 2.5 years ago we went to software shops here in Utah and they told us it'd be 500 grand and we wouldn't know when it would be done.
Unbelievable.
You know, and
Unbelievable.
you're 100% right. We'll get back to the little tool I built in a second because it's connected to what we're talking about. But what was it? 2 shows ago, I brought this up and I was talking to someone else about it. Um, Anthropic has been. We're gonna walk and talk here for just a second, everyone. Hold on, give me just a sec.
Yeah, for sure.
First, um, but we were, um, we were. Where'd I go with this?
You mentioned
Yeah,
Anthropic.
yeah, Anthropic. So I was doing a show the other day with another another guest where we brought up the fact that Anthropic reached $1 trillion in pre-IPO
Yeah.
valuation. So there's platforms like Jupiter and other platforms that let you trade STOs on these pre-IPO stocks, and it reached $1 trillion. It blew OpenAI out of the water, and the reason is because of what you just said. Claude lets you build these tools in
Yeah.
days, hours, minutes instead of months.
Yeah.
Um, what are your kind of thoughts on that? Because I know that's kind of we're going to get into that just a second with IPO content. But you said you're using Claude. Tell me kind of what you're seeing in terms of like where those AI companies are going,
Yeah.
and walk me through kind of your thoughts on that. Because we talked a little bit about this before.
It's fascinating to me. I love it. It's like this boom that we're in, right? So when we talked about, hey, the 90s was the build out of the internet, like we're sitting through a bull market of the build out with AI, and all of the different components of it. Like you have the infrastructure stocks, you have the neo clouds, you have all of these different components of the AI build out, which has been amazing to see and be a part of. So I think we're living in a real special time right now. But back to your question around Claude itself, I mean, it's fantastic. I mean, it's amazing the power that you have. And I think
Right.
what Claude is the biggest difference is that you're really paying for the infrastructure of it, right?
Mhm.
Because you have all of these different components of Claude where you could work in Claude Code, or you could work in a project, or you can venture off into design. And
Right.
I remember the week that Claude Design came out. It was like a month ago, I think. And I was
Mhm.
like, wow, Canva's dead. Like it could just take over businesses so quickly.
Right.
Um, and so it's been fascinating to see. Where I've, again, to come back to where I've seen the biggest delta in my process is, again, keeping like that accountability component, because Claude's mean. He's a mean, it's like ChatGPT will let you get away with stuff, with the emojis and all that. But Claude is like very straightforward, and it's like, hey, you violated this, you violated that, and it's not okay. And so
Yeah.
that accountability, particularly in trading, I think is really, really special. And you could build out like a chart trading coach. I
Mhm.
saw that the CEO of Citadel was saying that they're replacing, or like he's sad to see PhD level analysts being replaced with AI. And I said, wait a second, how do I get on that? How do I get a
Right.
PhD level analyst?
Right.
So I have a skill built in Claude to do exactly that from a fundamental perspective. Just give me a brief, give me the, the total addressable market, give me the numbers, give me the fundamental story, and help me build conviction. But then again, to your point, right? You could be contrarian and you could have your views all the time, but you have to be right. And that's where the chart comes into play. I remember William
Right.
O'Neill used to say, trading without a chart or investing without a chart is like going to a doctor and them not using an EKG before checking out your heart. It's
Right.
just ludicrous. It doesn't make sense. But yeah, not to go off on too much of a tangent, but that's where I see like the biggest delta in my process with AI today.
Well, let's talk about just because what I was going to get to about before we ran off on the tangent of Claude, which is pretty cool. Um, what I noticed when I built this tool, I got really excited because I started having positive returns again. I had several trades in a row
Yeah.
where I was just getting hammered or I was coming out even, right? And I specifically, I was talking through ChatGPT, which, you know, any AI program where you have to tell it to argue with you, I think is dead in the water. But we'll get to that when we start talking about their IPO because I have some thoughts.
Oh,
Um, but the and I just couldn't figure it out. I couldn't figure it out. I couldn't figure it out. I did I what introduced me to it is I did a combined article, or it was supposed to be a combined article with another Substack writer about Ben Graham, and I started learning about it. And so I got so excited because I was seeing these good returns in a row that I broke my own rules. I was going through and I was like, okay, use an AI to run Ben Graham and DCF on a whole bunch of different stocks. I'm like, this is awesome.
mm.
Like, we're just gonna make so much money at this. I wasn't paying attention to earnings anymore. And I wasn't paying
Oh,
attention to the other pieces of the model that I built in
yeah,
as guardrails. And I got totally killed.
yeah.
Frank reality, I got totally killed. I was doing very good, and I'm convinced I'll get my money back. I don't think it's like going to be that hard, but
Sure.
I got killed. I got pretty spanked pretty hard on that. And it gets back to your point of like, is AI super useful? And this is kind of my criticism to a lot of people who are talking about using AI to replace their analysts. I think it's a little too bullish. And I think
Mm.
it's too bullish because if you take, and I this happened to me, I did this in real time for Beyond Abundance Investments, which is just a little thing I'm doing on the side. Um, you can take the same financial information about a security, about an investment, hand it to 4 or 5 different models. And if they're trained to act in the same way, you'll get the same result, and they could all be wrong.
Yeah.
You know, I did that when I was looking at verticals. Beyond Abundance Investments, a private equity fund. It's what I was brought on to help build. And so it's more about industry verticals and fundamentals than it is about volume. But Copilot, ChatGPT, and Perplexity all told me the exact same thing. And it was kind of
Mm.
a dead duck. Claude was the only one that actually went a step further. So
Here's what I would say for that. I think
yeah.
that's a great point because it's funny because my wife does this too. She's trading. She trades a very small account. She trades like 5K. So if something happens, it's okay, But she like does takes a lot of direction. And I told her, I was like, hey, I give her my tips, and I'm learning through her. Like trading is, you could only learn so much through interacting with other people. You have
Right.
to put it in practice because the market is a balance between fear and greed.
Mhm.
That's all. Those are the two emotions that drive the market. And to the
Right.
point that we were making at the opening of this conversation, when there's too much fear, that's a signal. And when there's too much greed, that's a signal as well. There needs to be a good balance of it. So AI can't really get there yet. But what she'll do is kind of take direction. I said, listen, BlackBerry is forming a high tide flag, right? And high tide flags are these very, very rare patterns. They don't appear all the time. And what
Mhm.
did Claude told her? Claude told her it was a casino chip, verbatim. It was a casino chip.
Mhm.
I said, Claude doesn't know what he's talking about. This is a high tide flag. They changed their business model. And here
Right.
we are, 30, 40% later on like this amazing run from BlackBerry. And that kind of, just proves the point. I think that AI is good right now as a supplementary tool.
Yeah.
right?
No, I would agree. Yeah.
In terms of taking direction from AI, I mean, I think it's going to tell you to buy ServiceNow. It's going to, it has like kind of like this general sense of what stocks should do, but it doesn't really have a good handle on fear and
Mhm.
greed.
Yeah.
And I think that's essential.
Well, it also, just to add to that, because I think you're right, but I feel like it also doesn't have a very good handle on the contrarian viewpoint because that's not how they're trained.
Yeah.
When you read, when you, I don't know what the real term is. This I only hear it from coming out of China. So red test is a term I'm going to use. Any AI developers, feel free to butcher me in the comments if I'm saying that wrong. But when you red test one of these models, you're aiming for the median answer. You're not aiming for something that can kind of think for itself because it really can't think for itself. It's a
Right.
computer program, right? Sure, it's a really advanced statistical model, but it's a computer program. And so it's going to tell you, in fact, this was my experience. At UVU where I went to school, they have a 20 computer Bloomberg lab. I was in there all the time.
Wow.
You
That's
know,
really cool.
it was awesome. I wish I had, bit the bullet and did my CFA while I was still there.
I've never touched a Bloomberg terminal. I've seen them on YouTube. I've never touched one. I've always wanted to check it out, sit there and kind of go through it.
They're crazy. They're so cool. I mean, there's a lot of stuff in there that I think most people don't need or wouldn't use.
Sure.
But it's built for it's built for big players. It's built for the citadels, right? Which do use those tools.
Yeah.
But while I was there, because we had this tool, UVU is literally, George, I'll I'll be shocked in the next 20 years if it doesn't become kind of like a Berkeley level investment school. I could
Really?
see it. Oh, I
Wow.
could see just the caliber of the people that they hire and the fact that we have these tools. I mean, I was in the Bloomberg lab literally a few skips from where I was sitting every day was a sandbox program, which is startups, right? Led by a guy who helped design it at Harvard. So they're going places, man. They have a VC and a marketing a VC fund and a marketing firm in house as well, run by students. So it's like it's going nuts. But because of this atmosphere and because of just kind of the hype that was in the business school, I was surrounded by kids who wanted to do this stuff. I was surrounded by kids who wanted to start their own hedge fund.
Oh yeah.
They were doing advanced trading strategies, really crazy straddles, all sorts of stuff, right? And at first I was like, oh, this is really neat. But then I would sit there and I'd listen to them, right? Because in my mind, I'm like, okay, I don't care about the narrative. I want to know the truth.
Yeah.
Where is this going? What is this company actually worth? Because I think that's what matters here. And I started listening to their conversations, and they would say stuff like, "Oh man, especially," and I hate to throw this guy into the bus. I'm going to keep his name out of it because I really like him. I think he's going places. But when we were in college, every time he would get really, really nervous the week before and 2 weeks after Nvidia's earnings call. I'm like, that's odd. And he would say stuff like, "Oh man, like if this goes well, I'll be up 200 grand, and if it goes really badly, I'll be in like $50,000 in debt." It was comments like that. And I'm
That's
just
wild.
sitting there thinking, I'm like, what is this? And so I started to talk to my friends who were getting close to graduating. They'd done their CFA. And it turns out that this kid was basically doing nothing but using AI to build quantitative strategies. And every single quantitative strategy was a options call on NVIDIA, pretty much every single
Awesome.
one. And that works for some people. I am not criticizing him at all. But this is the point I'm getting to is at that time Nvidia was the play,
Oh yeah.
right?
Yeah.
And to give a counterpoint, at the time you wanted to get as far away from Micron as possible. I was joking right before I was joking with some friends right before oh, what's the whale model that's coming out of China? What is that one?
The DeepSeek?
DeepSeek, right before, like literally the day before DeepSeek came out, I was joking about how most of these AI companies have no revenue, and the first person who can do it cheaper is going to blow them out of the water.
Yeah.
And that happened to Micron. Micron got killed. But this year, because they do memory, which is a requirement, which I also said, people who read my newsletter will remember that, what was it, like 4 or 5 months ago, I made an article looking forward of like where the next five big market verticals were. Infrastructure for AI was one of them.
Mm.
Um, they're a memory stock, and you need memory, and no one was making it for like 6 months. So now they have pretty much a corner on memory on AI memory, and it's going to continue to drive insane returns for them, I think.
I have a sizable position. It's my biggest position on my
Mm,
portfolio in SanDisk since early April, and
right.
that was one of the first stocks that I bought. And my average cost like mid 700s,
Mm,
and I remember it going up, and they called it a lockout rally because you're locked out of the rally if you didn't participate right in the beginning of it, and even if you are in it, you're locked out from adding to your position, which is where I
right.
was with SanDisk. SanDisk just went vertical, and I
Right.
didn't have an opportunity to add to my position the way I usually would. I usually would pyramid into my position,
You can't
uh,
buy
but
up the ladder.
but the memory stocks have just been bonkers. And yeah, MU has taken the headlines the last few days. But memory stocks, the semis, I mean,
No, for sure.
they have been bonkers is the only word. But I
Yeah.
love that story about the guy doing the option strategy, like quantitative option strategy on NVIDIA. That's wild. And it just reminded me, like when he says, I'm either going to be 200K up or 50K in debt, and they're coming for me. It reminds me of a younger me because I used to think that's what success was in trading. It's going to be like, hey, we're going to take a shot. And if I make this shot, it's going to be all good. And I'm going to
Right.
get everybody a house. But if I miss this shot, it's over, you know?
Right.
And I think that as I've gotten older and matured, you start to learn how to like use time. And I think
Mhm.
that's what a lot of people, especially like the traders, post-COVID traders that have come into the market, is they underestimate time, what time can do for you. You've read The Intelligent Investor, you're a Benjamin Graham guy, like his guy is Warren Buffett, right? And Warren Buffett, what I love about what Buffett talks about is how much people underestimate what time and the power of compounding can do, you know? So I run multiple strategies. I have a growth focused strategy on my taxable account, but on my IRA, my rollover IRA, my 401k, they're indexed because I understand the power of just not actively managing an account and letting money work for you over a period of time. And
Mhm.
so it's funny when I see all these people argue on X or wherever. Oh, you should, what is it? Buy Voo and chill, or just buy the SPY or whatever. The
Mhm.
saying is and go away. Or you should pick stocks. It's like, hey, dude, you should probably do both, right?
Yeah.
Like you should probably, if you try to beat the market all the time, you're going to be in for a rude awakening. It doesn't happen. I don't think you should try to beat the market all the time. There's certain environments where certain investment strategies are going to outperform. Right now, we're in a growth first market. Like this is where can slim and a lot of growth strategies is really working when you're pressing. But there's going to be a market, especially sideways market, where I get chopped to death.
Mhm.
A down market, I'm good. Nothing's going to happen to me because I could easily sit on the sideline. An up market, I'm going to make money. But those sideways ones is where I really have drawdowns. So I don't try to beat the market in those. I'm indexed out when the market chops around like that
Right.
sideways.
Well, and I think that matters because even in my fund money account, which is the one I trade on, there is money that is locked up in VU right now.
Me too.
I don't touch it. I have another account at Select Funds that I've had for a long time. I don't touch it. The only thing I'm going to do with it is when I start figure out my job situation again and I start making money again, I'm going to move that money into a 401k and leave it there.
Yeah.
Because here's a news flash that I think most people are not prepared for, and I learned it the hard way, is what did Morningstar say? Most over 50%, I think it was like 68% of active managers do not beat the market.
Oh, no way.
Because good luck
Yeah.
trying to beat the wisdom of the crowd.
Yeah.
Um, for people who don't know, I've talked about this in some of my articles before, I think one or two. So the wisdom of the crowd is a mathematical principle that suggests that the more guesses you have, the more accurate the average guess is going to be. And that is what the market does Wow. It's been
Mhm.
doing it for 250 years. So, or pretty close. I think it's like 200. I don't remember what Higgins said in his book, but I actually haven't read The Intelligent Investor. I need to. I'm not a very big book reader, so I need to like find it on audiobook or something and go listen to it
It's
because
a snoozer. It's not the
yeah.
most exciting book in the world, but it's Ben Graham. When I worked for Bill,
Hmm.
we were trading company money. So in order, like, you would have to read his book, and then you'd be tested. And once you pass the test, you get a trading account, and they would give you a trading account. And obviously, like, the best performers would be, okay, hey, you're doing all right with, 2,500 bucks. Let's give you a little bit more money. I was
Right.
a terrible trader, like terrible. I was the worst because I was just coming off the street. Like, I had not
Right.
known, I didn't
You
have
were
a
bright-eyed,
strategy.
bushy-tailed.
Yeah, exactly. I was there just to soak it up. And, I was
Yeah.
around guys that were multimillionaires, mortgages paid off. They were there for,
Hmm.
they wanted to impress Bill. Like, they were there to impress Bill. And I was there to sell. I'm always been in sales. So I'm like, all right, I'm here to, so just like being around that was really interesting. But I agree with you, man. I think, again, if you try to beat the market all the time, it's crazy. I think you need to pick your spots. And it's so difficult, even for
Hmm.
me, to turn it off. Like,
Right.
it's so fun to press the button and buy. It's so fun. It is like so much dopamine from buying stocks and then having like the promise, like, this
Hmm.
could be the one. It's the funnest thing in the world, and it's what keeps me addicted.
Yeah.
I love video games, and
Same.
I love like the intellectual. I love to be intellectually stimulated
Yeah.
and like into it, right? So, like, the market does that for me.
Right.
It keeps me in there, but that's dangerous because it's my money, So it's like,
Yes.
this can't be fun all the time. Like, I know there's a saying that says good investing is boring investing,
Yeah.
something like that, and I think that's so true. And the answer, you said something that was really profound. You said, "I want to know the truth." I thought that was really deep because the truth is typically, you could find it in yourself if you're involved in the market. If you step into the water,
Hmm.
you can feel the truth. What does that mean? We talked about fear and greed. I remember one time, Tyler, I prayed. I prayed for market success. Like, I had everything lined up. I was like, this is the one, like your friend, right? I was like, this is it, and if this happens this week, I'm going to take care of my family. And I prayed and I said, I won't do anything stupid with the money. I'll get everybody a home, and I blew up. Okay. And I learned that was in 2022. 2022 was
Hmm.
my worst year. I learned that the truth isn't, well, you could feel the fear and the greed, and you have to like control it. And
Yeah.
that level of hope, when that level of hope is too high, start
Hmm.
selling some stocks, man. Start selling some stocks. And on the contrary, if it starts feeling too low, maybe look at some charts.
Yes.
But yeah, you said that, it resonated right away. That's exactly what I thought about when you just said that right now.
Oh man, you're just your comment there. We're just walking down memory lane here because I remember this was last year, and I spoke about this on a very painful, very vulnerable live show I did by myself. But the best I have ever done, and you know, pardon my French, I've done some crazy shit in my short time trading. If I had institutional backing, I could do some wonders. Hopefully that I try not to be arrogant, but I really do think that I could. If I from the beginning, if I had institutional money, it would have been crazy stuff. Like I bought, for example, I bought X, formerly Twitter,
Oh yeah.
right at I bought it first when I first heard Elon Musk was going to buy it, and then they waffled, so it dropped in price. So I bought more, and I made out like a bandit on that. We talked about crypto the other day just on Substack chat. I made out like a bandit on Doge. I made out like a bandit on Vivo when Vivo jumped up shortly before when they announced that they were going to sell to a Saudi oil company. So there were a couple times where I got lucky, and I happened to be structured in the right way because I think you kind of need both. But
Hmm.
the best I have ever done is last year I was listening to Chris Whalen, leader of Whalen Global Advisors, and he was talking, and I had been nervous. I was in gold and I had some other stuff that was just kind of sitting around that was just waiting there. I was getting real nervous. I was getting real nervous because I had guessed the Trump Liberation Day trade correctly.
Oh.
That one was pure luck. I had no, my thesis going into that is this, and this will probably go up. There was no fundamental analysis to it at all. I would luck. Minus, I did notice a pattern with Trump coin that was kind of the backing. I was like, okay, so right before he says something crazy, Trump coin rallies. So, but I was getting nervous because I had had a really good run, and I'm like, I need to get this out. I need to get this out. But I'm always nervous. I'm like you said, like I don't want to pull it out because if I just leave it there, it could keep going up. And Chris Whalen simply said, "It's time to take some chips off the table."
Mm.
And I should have listened to him. I did listen to him in part, but then I was like, well, I need to put my money in something. I should have just listened to him and just maybe put it in silver or something. Because I made out really well. I put some in crypto, tanked. Because crypto, sorry, go ahead.
No, I was gonna say I think that's where most people have trouble. Like it's funny.
Yeah.
I'm happy you shared that with me because I think a lot of people have trouble with sell rules. I think most investors have a hard time. When do I sell? How do I sell? What do I look for when I sell? And that's actually like what I do best. I'm really good at selling. I'm really not that good at buying. Because of that leverage between fear and greed. So every time, and I'm learning this about myself as I continue to grow as a trader, as I continue to refine my process, is that where I get in trouble is when I go on a win streak, I get myself in trouble with oversizing positions. That's my trouble. And I'm happy to be like getting this out in the universe and like talking about it, because when I do that, I have to remember to pull it back because I always get burned on that and have discipline in position sizing. But selling, I feel like a lot of people have trouble with. I'll tell you one good one because this is I like the story you're talking about, and I haven't talked about this too much. But 50 Cent, the rapper, back in 2011, I believe, or 2012, it's a long time ago, he came out with a tweet about a stock that was going to like get a deal for his headphone company. I forgot the logistics of it, but it was completely against the rules, right? And I knew nothing about the stock market, and I was like, "Yo, 50 Cent, I love this guy," right? Grew up on this guy's music when I was a kid, and then so I bought the stock, and it went up, and I had a tiny account. I had it was like $150 account, and I made out like $600-700 on that. And my wife and I, we were so poor, but we wanted to get married. So we took that money and went to Vegas to get married, paid for the license,
That's
paid
awesome.
for all of that stuff. So
Best investment you could make.
50 Cent paid for my wedding through a tweet that he got in trouble with the SEC for.
That's hilarious. That's so funny. It's crazy how that happens sometimes. One of the things that I'm starting to learn, which I think matters here, I think matters just in general. It's happening right now on my Substack, which is not connected to trading at all. But luck is a skill that you can learn. But what people don't realize is training the skill of luck is putting the processes in place so you don't have to think about it because your brain is actively trying to sabotage you. One thing that I talk about a lot, and I've actually hinted at doing coaching for this because I think a lot of people don't know what it is. I learned it at this current company, and I think more people need to know about it. But one of the biggest things that we were robbed of growing up, and this is happening today still, is that most of us don't actually know what we want. And it's the reason why we get in these weird feared and greed cycles. It's why, we get super hyped over something. It lasts a week and then we give up. New Year's, I'm losing 10 pounds. I get really excited. I put a picture of Chris Pratt up on my wall, and then 3 weeks later, you're back to the, Doritos or whatever, right? And And we're robbed of that because we were never taught how to do it.
Yeah.
I have my method that I used, and it changed my life fundamentally. But, you know, that is the process of what I'm talking about. Your brain has not been trained correctly on average for most people in my belief. And so your thoughts actively sabotage you. And you don't realize it because they're not doing it on purpose. The whole purpose of every thought in your head is to protect you in some way. Uh, and so people get in that where they get, Kahneman described the classic one. They end up buying high and selling low
Yeah.
because they get into the suspicion, oh, it's just going to go back up or it's going to keep going up. Anyway, um,
You
go
you
ahead.
said something there that I don't want to go by it because it's what I tell my kids.
Mm,
Uh, is knowing what you want is 100% the thing. Uh, and you're right. People don't know what they want. I reached that point at one point where I didn't know what I want anymore because when I was, when I was coming up in my 20s and trying to make something of myself, I used to jog and I would live next to this affluent neighborhood.
yeah.
And it was the my path when I was jogging was kind of uphill, looking at these beautiful houses that we lived adjacent to. We lived in a very
Mhm,
small 2-bedroom apartment. And my kids were sharing a room; they're babies. And I would run at night, and I would look at the houses, and I would tell myself, "I want a house. I want a house. One day I'm going to own a home." You know, and having that in my mind and going and doing everything that I needed to do with that in my mind, since I knew what I wanted, it happened for me. Right.
right.
But then once you get comfortable, you don't know what you want anymore. It's harder for things to happen for you.
Yeah.
Right. Unless you know what you want. And funny enough, it just kind of lined up. You talk about luck being a skill. Well, we could transition if you wanted to IPOs. All I studied for years was the IPO base. I studied IPO base after IPO base after IPO base. That's all I looked at because it was the most exciting way to trade a growth stock is through an IPO base. What happened? Twilio went public. It formed an IPO base on the chart. I recognized it and I did a triple digit that year in
Wow.
returns. And I was able to use that for a down payment on my house, you know,
Nice.
and it just lined up, right? But that would have never, to your point, that would have never happened if I didn't know what I wanted.
Mhm.
Um, and the Twilio, I went off to actually go work for Twilio years later. It's so funny. It was the best trade of my career 2 times. Um, Once when I bought the IPO, and second when I sold the company stock given to me when it was breaking through the 50-day moving average and was the top.
Mhm.
But yeah, no, it just reminded me of that. I want to just touch on IPOs for a second too, because I know it was kind of one of the hot topics here.
No, and we're gonna get to that. We're gonna get that here really soon because I think it's important, especially for people who are interested in investing. Well, we'll get to why. I have some logic on why I think it's important, but I want to just throw this in here. This wasn't originally what we're going to talk about, but I think people need to know, like, the law of attraction is real, man.
Oh yeah.
It just happened to me, and I'm kind of kicking myself that I wasn't more specific. But for people who don't know the law of attraction, call it faith, call it the secret, call it whatever the hell you want. This is something my father taught me, and he came from dealing drugs and homeless at like 13 to 16 to multi-million dollar net worth now.
Wow.
Real life, man. This is real shit. Real stuff. I need to. I'm having a kid. I need to stop swearing, but um,
Congratulations.
um, thank you, thank you. He's healthy, so we're excited. The law of attraction is real, and it simply is this principle. I know some physicists are going to get mad at me for this, but if a human being looks at a stream of particles, when they're observed, they immediately start acting like particles. When you're not looking at them, they're wherever. The second you look at it, they're in a specific spot. And I believe that is how reality works. Not just because the quantum universe is aligning as you observe it, but also because it affects your actions. The law of attraction states you pick something and you keep telling yourself you're going to get that, it will happen. And it's going to happen because your subconscious mind's going to get on board. This is why what I actually think, a person I'm a Christian, I'm a religious man, so I believe in faith, but the actual mechanics of it is that your subconscious mind gets on board with what your conscious mind is doing. And all of a sudden, you no longer have that conflict in your mind of wanting both the Doritos and the summer bod at the same time. You know, all of a sudden the sacrifices become much easier to make.
Oh yeah. Oh yeah.
This this happened a little bit ago. I work in the startup world and I'm starting to do like branch out and do some other stuff. And my wife was very sad about it because she was like, I know you don't want to work. You want to like work as little as possible, but make enough money so you can be around our kids. And I told her, I'm like, I know what I signed up for.
Yeah.
When I graduated, I knew it's going to be a couple years of pain. The reason why I said I need to be more specific, and I would tell this to anyone when it comes to the law of attraction, is for years now, I live in downtown Salt Lake. I'm a jazz fan. I like going to the PBR rodeo. So I would walk to the Delta Center all the time.
Oh,
My
cool.
wife grew up in Bountiful here in Utah, and she went to Salt Lake for fun. So we were in City Creek a lot. By the way, if you're ever in Utah, City Creek, beautiful.
I had a buddy
Gorgeous.
just moved to Park City.
I'm sorry, that's a mistake. I like Park City. I'm
I've
teasing
never
Park
been.
City, but
I've never been to Park City, but he just moved from
it's
LA to Park City. So be careful because you got people from LA moving out there.
what I tell people is I run a smear campaign on Utah so they stop moving here and jacking up the housing prices. Because I'm sick and jacking up the prices of SUVs when they don't know how to drive them. All the Californians come out here and buy an Escalator or Yukon, and they make traffic awful the second it snows. But all jokes aside, gorgeous. And for years now, right on the corner of City Creek Mall, it's a massive mall in the middle of the city. Zions Bancorp has their headquarters, as their main office. I would walk past those doors once a month at least. And every time I walk past it, it's like one of these days I'm going to walk in through those doors into Zions Bank's corporate lobby, not like the bank side. I had no interest in going in there, but I would walk through those doors one day. And recently, I've started looking for some other jobs. I feel like it's my time to move on from what I've been doing. And I got a job offer from Zions, and I walked through those doors.
Wow.
And as I was leaving, I'm like, really should have been more specific on what I meant. because the universe will do that for you if you're actually if you get real dialed in, man, on what you want out of life.
Yep.
And you get painfully specific. What do you actually want? What do you want out of this life?
And that's hard.
It's super hard.
Yeah.
It's super hard because you turn on Mad Men or Suits or whatever the heck.
Yeah.
Or you turn on YouTube and you see Jake Paul's mansion in the hills in California. You're like, man, I really want that.
Yeah.
And you don't realize how much work goes into a house that big. You don't realize how much of your life you have to sacrifice to actually afford that house. And I'm not saying it's a bad thing.
When you realize that some of these things don't even make you happy. Like, I remember my goal always when I was a kid, I was a big James Bond fan. And it got me into the world of wristwatches. And I was like, ooh, I always wanted an Omega watch. And I got an Omega. And then it doesn't stop. It's like, oh, and now I want the Rolex. And when I bought the Rolex, nothing changed for me. Like, not even a little bit. I don't even wear it because it's like, all right, someone's going to try to steal it. Yeah. But nothing changed for me. I think it was one day of me just staring at it and being happy I bought it. But some of these things, like, that's the thing, is you don't even really know sometimes you think you want something and you don't even really want that thing. What I wanted was to feel accomplished. What I wanted was to achieve my goals. The Rolex is not even real. It's a facade of that. It's just something that happens to be a proponent of that. But what I really wanted was that a feeling of accomplishment. Mm-hmm. So it's very tricky. I'm with you. My mom gave me The Secret, the book, when I was really young. So we're talking the same language. The law of attraction is 100% one of the strongest forces of the universe. And it's really a secret once you start to learn it. But yeah, no, I'm locked in with you. I love that we're talking about some of this stuff. It's like, this is some of the stuff I really enjoy. Yeah,
me too. I enjoy talking about this stuff. It's why I started the newsletter 2.5-ish years ago. But started writing, I should say. Newsletter's a little bit newer, but You know, here's a fun thought exercise, and it kind of helps. I'm giving this away for free for people who want to actually start using this force in their life. This is something that I did with my wife just kind of on a whim, and it was really fun. But it really puts things into perspective. And specifically, it was a question from a coworker. I was working as a service writer at an auto shop, and he turned over to me out of the blue and said, "If you had $1 billion, what would you do with it?"
Mm.
That was a question, right? And I know most people would go like, "Oh man, I'd move to Dubai, I'd buy a jet, I'd buy a yacht, go hang out with like Jeff Bezos." They would want nothing to do with you, by the way. You're too small. Um, but all the usual answers. I'd be like, "Oh, what's his name? The rapper coming out of China now, wearing like the Rolex on one hand, the Gucci with the horse track behind him." But you know, um, I was trying to take a more specific approach, right? And so I sat down, I built a spreadsheet because I'm a huge nerd. I built out a spreadsheet. I put $1 billion like on line one, and I just went down the list of everything I wanted.
Oh, that's
So it
really
was
funny.
like,
That's an interesting little exercise. You actually
uh,
went through it.
yeah, no, and it started with the usual stuff. It's like, oh man, I really want to buy a home. There was a $4 million home they just built up where we're at. I really love it. It's like, let's just slap that thing on there. $4 million out the window, whatever, right? Pay for it in cash. That's done. I really wanted a Rolls Royce Phantom, so there goes another 5 million, right?
Those are nice.
Uh, my wife was teasing me because I had put like just like a Jeep Wrangler on there, and she was like, you want a Rolls Royce, and you're giving me a Jeep?" And I'm like, "It's what you wanted." So it's like
I had a
the
Jeep Wrangler. Love a nice Jeep Wrangler. Oh my goodness.
the top of the line Jeep Wrangler, it's like 180 grand at the time. We'll
Rubicon.
toss that in there. You know, we'll buy a couple businesses, buy some car washes, buy a couple Mavericks. 10 like something grand, whatever, 10 million, whatever it was. So we knock all that off, and then we're like, now what?
Yeah.
So we put on, we set aside a couple million for our kids' college tuition, some retirement money. Got to the bottom of the list. Now what? $938 million left. And what people don't realize is, and maybe it was 830, but the point, it wasn't
Wow.
much. It was like a
Yeah.
10.
Yeah.
And the thing is, what people didn't realize is part of that, I built in like $300,000 or $400,000 a year in income from businesses as
Right.
well. So it's like, it's really not going down.
Yeah.
Um, but I suddenly realized that I didn't need that much money
Yeah.
for what I wanted. There's another exercise that I did that had a much bigger impact on that. I'm not going to give that one away, but this is what we're talking about. If you really want the law of attraction to work in your life, you need to actually know what it is you want.
Yep.
And if you do that, it will. And it's hard. You get distracted. I get distracted. I ran off on a crypto spree for a year, and it was probably a waste of time. Not necessarily the people I met and the work I did, I would not change for the world. That was so valuable to me.
Yeah.
But in terms of getting closer to my goals, it didn't. And I think that's an important lesson to learn is it's not just, back to our comment about trading and processes, it's not enough to just want something
Right.
because you don't know what's going to go into it until you sounds like what we've both done until you sit down with
Hmm.
whether it's God, the universe, whatever you choose to believe, and you put your name on that bottom line saying, I know what I'm signing up for and I agree to it. The law of attraction isn't really going to work in my experience. And I've seen it do some crazy stuff. But for me, it didn't start happening until very, very recently because I sat down with God and went, I know what I'm signing up for and I
Yeah.
know what I want. And it's painful. It's still painful because it always takes longer than it needs to. ESO research, thanks for joining. But it's real. It's freaking real. And I couldn't say that 2.5 years ago when I first started this startup, but I know it for a fact now. For a fact. And it's experiences like we've talked about that prove that to you. It's just these weird, you know, responses from God and the universe telling you, hey, you've worked at this. This is what I'm going to give you for it.
No, yeah, it's amazing, man. Again, I love that you went through that exercise and kind of came to the conclusion of like, man, you don't really need too much to be happy. And I try to instill that in my kids. I talk to my kids about it too, especially in the age of social media,
Right.
where it's like, there's all these forces fighting for your
Mm.
attention and telling you that this is what you need to be happy, when life is much more simple than that. Right.
Right.
So yeah, I love that, man. Thank you for sharing that with us.
No, of course. I'm just one more data point. I don't know if you're a big fan of the Modern Wisdom podcast, Chris Williamson.
I've come across it like clips and stuff, but I'm not a
Yeah.
regular listener.
So a little bit of background, and then after this we'll hop over to IPOs and the show out there. But
Yeah, of course.
Chris Williamson, he runs a podcast called Modern Wisdom. He made a lot of money, did really well for himself. Before he started doing the podcast, he was a club promoter.
Oh, really?
Yeah. And did really well. Did really well. Started young, like 18, 19 or whatever, however old he was. And he did really, really well. To the point where at one point, I think he was in Dubai or he got an offer to go be a club
that
promoter.
well. He did that good.
Yeah. To be a club promoter in Dubai for a stupid amount of money.
Wow.
Right. And what he said, I thought was so interesting, right? Because it buys into like the hedonic treadmill mindset that we were all taught to want with the watches and the nice homes and the hotels and all that, right? He was looking through it, and after being a club promoter for as long as he had been, he was like, this entire city of Dubai is not real. It's like Vegas. You walk into Vegas the first time when you're a kid and you're like, oh, this is amazing. You go back as an adult, none of it's real, man. It's like all like plaster and like this weird, like hedonistic paradise, which, some people, they vibe in that.
Oh, it's a shit show. I just got back from Vegas like 2 months ago. My buddy, he writes a sports gambling column. And like for his birthday, every year we go out to just hang out at the sports book,
Right.
and for March Madness.
Okay.
Oh, what a shit show Vegas is. It's terrible. It's the caliber of people that go to Vegas. It's crazy. Just to watch people walk by, you're like, what? It's like a different planet.
Yeah, it is.
Like you landed on a different planet. And it's so empty now. My dad used to talk about Vegas in the 60s and the 70s and like this great time, but man, it's really fallen off.
Yeah. Well, and part of that is, and we don't have the time to talk about this. Personally, I think part of that is, this is going to get real dark and I might get in trouble for this, but back in the 60s and 70s was mob time.
That's right.
What people don't realize is the mob has rules.
That's right.
They're real strict. If you listen to Sonny Francis ever, they're real strict on the rules.
Oh yeah.
And it covers the whole nine. It covers from like how to treat your spouse and other people's spouses to how to run your business and taxes. Like it's real strict.
There's a code. They definitely had a code,
There's a code.
And you're reminding me, like, because my son is 16. So we're going through like the movies, like the Pulp Fictions and the Goodfellas and like Casino. There's like the Casino movie is really kind of shows a little bit of the world. Like you had these people come from all over to this city in the middle of the desert.
Right.
And to your point, like there's a lot of code and structure to the way that they built that town. It's a fascinating kind of background.
But it's gone now.
And city. Yeah.
That's what I was going to get to is that code's gone.
Oh no. It's dead.
You go to Vegas now and sure there's some left, like the UFC still has some influence. So there's still like some limit on the debauchery, but at some point, when I became a teenager, because they went through the family friendly phase for a while. Turns out if you're a gambler's paradise, it doesn't help to be family friendly because gamblers don't like kids, apparently. But I don't know why. My dad always he wasn't a gambler, but he would always like play some slots whenever we'd go through to visit my grandma, and it seemed pretty lively, but whatever. After that phase ended, I feel like they just tripled down on the debauchery, and you can't.
Oh yeah.
You do that, and it starts looking face. It looks like a Playboy City, where you walk away, and it's like this is an adult Disneyland. This isn't real.
It's exactly what it is. Adult Disneyland is the best way you could describe Las Vegas today.
And the point is that I was going to get to is because what I've learned in my short 28 years on this earth is that your happiness isn't actually what you're striving for. Happiness and pleasure are emotional signals that you're moving towards something that you actually would be satisfied with and feel good doing. And so, and sometimes that is like being a degenerate gambler or whatever. Some people that's what they choose. And that's their choice, right? But you get those signals from moving towards that objective. You know, I'm at my happiest when I'm creating stuff like this. When I'm working in the startup ecosystem, when I'm coming up with fun little creative answers, or like, I just what's it called? I'm working on the side now with a couple little companies doing some fun things, and just the sales process I get excited about.
Sure.
Just that hunter, and that's where the happiness comes from. It's not the end all be all. And I think if people aren't careful, if they say like, "Oh, I just want to be happy," you're going to end up in the place where you can get happy, where you can get happiness the quickest, and that's not where you want to be.
It's the Zion's Bank, right? It's the be specific. Like
Be
find that.
specific.
Mm-hmm.
What is it you actually want, and then work towards that thing, and it'll happen.
Yep.
Okay. Let's close out because we've already gone for about an hour. But
Yeah.
let's talk IPOs.
Sure.
I have some thoughts. George, I've been watching this closely since they came out. I haven't done my own analysis on it yet, but I've listened to a lot of people who are way better at this than me, and none of it's good. So before I jump into that, I want to hear your thoughts. We're talking SpaceX and
Yeah.
OpenAI,
Yep.
two of the largest IPO bids in U.S. market history.
Yep.
Walk me through what you're thinking on this.
Yeah. Again, IPO is. I wouldn't say it's my specialty, but it's the pattern that I'm attracted to the most, just naturally. It's a shorter pattern. You have cup with handles, double bottoms. You have all of these patterns that usually take between 4, 5, 6 weeks to develop with an IPO base. You don't get that. You get a week, 2 weeks to kind of see where it goes. What I'm thinking is it does seem, like the valuations are wild. Like it's hard to fathom, like really like to wrap your mind around how big these companies are valued right now, particularly without fundamentals. Like we talked about fundamentals. There's the earnings and the sales and what the profitability looks like. So for me, the way I'm looking at it is this could be either really good or really bad. But it's something that I want to see develop. So what I do is I wait. In terms of just investing and trading these things, you don't have to trade an IPO day one. It's kind of a gamble to do that. Give it some time. Let it build support and resistance levels. Let it build a price ceiling and a price floor. Let it bounce around a little bit, and then see where the institutions either come in to support or they fail to support. So for me, it's just a matter of letting it happen. It's going to happen, and watching it unfold. Now, in terms of it being the signal for a market top, that could very well be something that tops the market, or it won't. I think back to the sentiment thing, right? The more that people say and believe, like, oh, this is it, and how ironic of an end to the AI bubble than like the OpenAI and Anthropic IPO. That would be just almost too perfect for the movie. Like that's like the perfect ending for the movie. So the more people that get behind that, the more skeptical I think it's actually going to happen. But for me, price is always king. The technicals are going to keep me safe. I have my sell rules. You have a break of the 50-day moving average in the major indexes. I'm scaling back. You have big selling coming into the market. I'm scaling back. And then on the contrary, when there's market flowing into equities, I'm scaling up. So we're going to be safe, right? As long as you have your buy and sell rules, you should be safe. You're not an institution with hundreds of $1 million that you need to pull out of a stock. Now you're in deep shit.
Right.
Because you can't do it right away. But as individual traders, if you're trading 5, 6, 7-figure accounts, you're fine. You can pull out of the market whenever you need to pull out of the market, which is a huge advantage
Yeah.
for individual investors. So for me, it's a fireworks show getting ready to happen. I got my lawn chair, I got my beverages, I'm set up, and I'm just waiting for the show to start in terms of these IPO.
I like that. And I appreciate the happy sentiment because I'm coming in with some real criticism here. But I think, the important thing to realize is these S1s, they're going to get filed. The floats are going to go public. People are going to buy them. And then the market will determine what it's actually worth. And I think that's the important thing to remember here. I have to be honest. It'll be curious to see what happens, George, because this was one of those. Every once in a while, I get a very clear cliff, we'll call it. I see the edge of the road.
Mm-hmm.
And the OpenAI IPO was one of them. I was telling my buddy James on the live show like a couple weeks ago, I made the joke, does anyone smell a down round? For people who aren't in the valuation, VC funding, investment banking space, a down round is simply the fact that when companies are being funded pre-IPO, so when they're still a startup, when they're still growing privately, they get funding in rounds. And these rounds are, like your pre-seed round, your Series A, your Series B, where companies come in. Usually it's syndicated, so it's usually a lot of different investment funds coming in, and they decide how much your company's worth and how much equity they're willing to buy at a certain price, right? A down round means that a whole bunch of investment funds, VCs, investment banks, whatever, get together and realize, oh, your company's not worth what you said it was during your last round. It's worth less.
Mm-hmm.
And so now we're not going to pay as much. And it does all sorts of causes all sorts of danger. It dilutes the original founder shares, it makes them worth less, it makes the previous investors, they lose out on money. And so they typically have like covenants and things in their agreements with these companies to protect them. But the reason why I said that is I believe OpenAI is overvalued.
Mm-hmm.
And the reason why I believe that is twofold. I think SpaceX is as well, but we're going to get into that too because it's the same reasoning.
Yeah.
The revenue is just not there.
Sure.
At the end of the day, what are you buying? If you're an institutional investor and not a trader, because traders, we trade on volume, we trade on movement, right? Typically, and we trade on, like you said, events that happen that change the value really quickly or in a really big way, so you can capitalize on that.
Mm-hmm.
If you're an institution, if you're a pension fund, if you're a 401k, if you're BlackRock, you're Citadel, right? You are buying massive baskets of securities out of this. You're buying 5% of the float,
Mm-hmm.
millions of shares. They're buying it so they can have ownership and so that they can have the value that equity brings. It's not just to have it for
and
fun.
they're building, and to your point, they're building these positions over the course of a long time because they can't just come in and buy all at once, or else they'll ruin their entries. So it's like,
right,
it's a treasure hunt really to understand where the institutions are making their buys, supporting the stock and things like that. And that's where volume comes in, right? Because it's William O'Neill used to call it the elephant footprints. Like, they can't hide volume spikes. Like, that's not Aunt Sally buying the stock. That's a big institution coming in to buy the stock. So you kind of like track those to see what they're doing. But yeah, this is taking course over a long period of time. Sorry to
no. I appreciate that. Because you're right. It's not happening overnight.
Yeah.
I know I made the joke on LinkedIn that when the market jumped back up after it fell, what was it, 2 or 3 weeks ago? I pulled up a chart and a news headline about how a bunch of hedge funds had emptied their short positions and just made the criticism comments like, okay, did the market actually recover or did all the hedge funds get called?
Yeah.
But the thing is about this valuation and why I think it matters is so much of our economy now rides on these AI companies, including OpenAI.
Oh yeah.
And to this point, OpenAI has not provided the revenue to suggest they're as big as they should be, and they haven't provided the market narrative to justify that they're as big as they should be. And that's what bothers me. From kind of a less fundamental, more qualitative perspective, what does OpenAI even do? Okay, so let's look at some of their products. They have what basically turns into a search. That's your chat GPT. They have agents that you can make. They have like their PhD model, so like a research model, right? They had Sora until very recently. They have these government contracts, right? That's like their 5 big models. VO3 is much better than Sora. For government contracts, Palantir and Scale AI exist, and they're much better at that because that's all they do. Research model, Gemini and Claude are much better. If you're doing a search function, that's Perplexity's whole game.
Oh yeah.
That's all they do, right? And a specialist will beat a jack of all trades every single time.
Right.
So that's my first question. And you look at their revenue. Did I have revenue figures pulled up for these guys?
I think you did. Yeah.
I did.
And while you pull that up, it's just interesting because I think that it's
it.
a great point in terms of use case, right? I feel like it's a rush to the enterprise and developing enterprise relationships and kind of figuring out how to, get agentic use cases into the enterprise. And you would think that Anthropic would be miles ahead of everyone from an enterprise perspective. But what's really interesting, to your point, is this recent backtracking of AI costs. Like, whoa, this is actually really expensive, to actually have like AI agents at the scale that we need them. Maybe it wasn't too smart to lay off a bunch of people.
Yeah. Ask Klarna how that's going for him.
Yeah, exactly. Which is a big to like these companies that just completely gave up on people for a P&L of what they thought was going to be a positive P&L. So yeah, I think kind of that adds to your conviction. I would just say, Tyler, the way I think about it, and I don't disagree with you. I think that what you're saying makes a lot of sense. I would just say keep an open mind. To your point around the market makes the decision. Like, I always find myself in trouble when I argue with the market, and it's just a matter of letting it unfold and seeing where the market values, because it will be priced at some point correctly. It may not be priced correctly day one, and I'm telling you, a lot of people will get hurt on that. There is going to be a ton of people who lose money on these IPOs, and that's just the nature of the beast. This is the market. It's a zero-sum game where it's, someone is going to get washed. But I would just kind of really, really advise, and I'm not a financial advisor. I probably should at the top of it, but I would, as a personal trader who's been doing this for 16 years, God, I hate saying that. It makes me feel something getting old. But I would say keep an open mind and also have sell rules. Don't argue with the market. If you start getting down on something, have a percentage set, and set a stop. And do not mess with that, have it be golden. Because once you start getting down to, hey, 7%, let's move it to 10, 15%. Now it gaps, you're down 20, 25%. By the time you're down 50% on a stock, you need that stock to double to make your money back.
Right.
And now you're a long-term investor. Right. So it is just an area that you don't want to go in. And I hope people are really, really safe as they get involved with some of these IPOs, because you're right. The numbers are already funky.
Yeah.
And if the market decides that in spades, individual investors will get washed.
Right. Well, and I'm actually I'm less concerned about Anthropic. Even if Anthropic doesn't have the revenue to support their valuation at the moment, which I know some analysts have argued that, they are the workhorse behind this new wave of SaaS production. They're the ones doing that, and they've been doing it for a long time. Claude Code's been out forever. I think Cursor runs primarily on Claude Haiku anyway. So really? I don't know for sure. I'd have to go check. But that's Claude's whole bag.
Oh yeah.
Anthropic's whole bag is enterprise software. So even if they don't have the revenue, they're driving that engine, and I think that is going to drive them through to where they start making more money than they're making now.
Yeah.
My suspicion, my fear, I should say, George, is the fact that so much of our economy depends on this. We've really, from the average investor to the federal government, have doubled down on AI, on OpenAI specifically. And even the qualitative figures are not looking good. What was it? We just had a guy who left OpenAI and said that Sam Altman just lies through his teeth. And,
He went to
you
Anthropic,
know,
right?
what? He
That
went,
guy went
I
to.
don't remember where I thought he started his own company. Maybe he went to
Oh, okay.
Anthropic. I don't know. I just remember hearing that and seeing a lot of people get really nervous. And then shortly afterwards, what was it, 2 or 3 months ago, their own CFO comes out and says, I don't think we're ready for an IPO. And Sam's like, don't worry, we'll just push it back to September. So it's like, it smells weird, and so much is riding on this. So it's
It's fun. You're 100% right. Our whole economy is a big bet on AI.
yes.
So it has to work out. I mean, it better. What's funny about like and I'm naturally an optimist, right? Like I look at things and I'm optimistic at first, but I'm not an idiot either. Like I could see like where there's red flags, but I think that when I think about it, it's like, all right, so if this is the 90s again, the 90s was great, 97, 98, 99, but it ended with the dot-com bubble. It ends tragically each time, you know? Well, if this is similar to the run up in the 90s, then on the other end of it, it's also a bubble where we come down as well. Now, what causes that sell off? Could it be the IPOs? Absolutely. Could it be something else? Absolutely.
Right.
It's like something that we all know is going to happen because it's like we've seen this movie before. But what causes the ending to the movie is still out there to be. But you're making a great case. Like a lot of this is very nonsense. We live in a nonsensical reality right now where we have, Commander in Chief is calling out symbols publicly. And these are, I would have never thought. Like, my wife, it's funny. My wife said this morning. She's like, what's he buying? Because she had a stock go down today. She's like, what's he buying? I'm just going to do whatever he. And I'm like, you have to have your process. You got to do your screening.
Yeah.
You got to look at. But it's just so nonsensical right now, Tyler. Nothing upside, down is up is down. And man, I do turn off CNBC. I don't, because if I did have that news coming in, it would mess up my judgment. I just need to focus on, okay, turn the computers on. And Bill said this. Bill used to say this. He said, I don't know what's going to happen. I come in every day and I turn the computer on. That's all I do. And it's such a simple thing, but it's like, all right, I sit down, I look at the charts, what's happening, and that's going to help me build how I make my decisions. But yeah, on paper, it's like a farce.
Yeah. Well, and here's the thing: what I would caution people on, because my brothers and I talk about this, because both my brothers are developers. They're both kind of interested in the markets as I am. Cool. Every single member of Congress, Senate, and every member of our federal government has 45 days to disclose their trades. So chances are, if Trump's calling him out, he may already be out.
That's true. That's a great point.
Not saying he isn't. Not saying he is. Not saying he isn't. But he has 45 days. And if that was me, I would use all 45 days, because the number one rule that my father always taught me, and I've seen is true in every aspect of investments that I've seen. If you have someone who has a model that works all the time, you never hear about it.
That's right.
Because why would you?
Yeah.
Keep
it a secret. Could you imagine if he's using the public as liquidity to exit on trades?
Oh, man.
Could you imagine? That would be insane. That would be crazy. Like, that would be a movie. I didn't even think about that, but that's a great point. Like you could be out and just, all right, I need liquidity to exit my position.
Mm-hmm. I mean, I hate to say this, but one of the things, we were talking about crypto again before, one of the things that happened, it's a consistent problem in Web3 and crypto, is the fact that, and so much it happens that whenever I talk to people in this space, that's what we talk about. You never want to be someone's exit liquidity
Yeah, you can say that again.
because hedge funds do it all the damn time.
Mhm.
They do it all the time. The reason why, and if you just casually scroll through the FT, it happens probably about once a month where you'll be reading through and it's like, oh, such and such hedge fund, the stock of some price went up, and then you look into it and such hedge funds had a whole bunch of short positions that they had to buy back. Or, such and such stock fell, and you find out it's because some hedge fund sold a whole bunch of it after someone on Twitter said it was going to the moon. So
Yeah.
never be someone's exit liquidity. And so I hate to say it, it could be happening where you are the exit liquidity for the entire federal government, um, which would suck, but
Yeah.
it's not outside of the realm of possibility at all. Let's talk SpaceX. Speaking of which, since we're talking about getting out, can I
Yeah.
be can I be really bearish on this, something really quick?
Yeah. Hell yeah.
Um, and this is almost evil, but I think it's worth sharing, and it's not mine, unfortunately. I wish I'd come up with it because it's such a scathing take, but I think it's something that we all really need to at least acknowledge. Um, it primarily comes from two people that I've listened to, Patrick Boyle and then Scott Galloway are the two people that I hear it say about the most. Not usually critics, and then Ed Zitron also. So if you listen to any of those three guys, they're great. Give them a listen on YouTube. I think Scott Galloway has a Substack. You can go read his stuff. So does Ed. Actually, now that I think about
Scott Galloway has some great stuff. I
it,
love his stuff.
I don't think Patrick Boyle does, but he's a professor, so he's probably busy. I think specifically with SpaceX and OpenAI, they are not going IPO because they want to. They're going IPO because they have to, because
Ooh.
funding is expensive and the VCs are getting antsy. They're coming to them and saying, "Where is my money?" Because I mean, you look at it. I couldn't find the figure. I couldn't find like exact figures on OpenAI, but according to tech startups, it's saying that Bloomberg's estimating 12.7 billion in 2025 for their total revenue. Um, SpaceX is worse. So the only division of SpaceX that is truly profitable is Starlink. Uh, the AI division is burning billions. They only brought in 818 million in the first quarter of 2026, and they're here's the numbers for 2025: $18 billion in revenue, $4.9 billion loss.
Oh wow.
Which part of that is expected. Rockets are expensive. It's a
Yeah.
really high cost of capital. Same thing with data centers. If you're doing what Sam Altman says he wants to do, which is own the complete infrastructure of AI, you're going to build a lot of data centers. You're going to buy a lot of chips that is really expensive, and you're not going to get a return on right away. I think I was talking to ChatGPT about this, arguing with it, that, from a funding perspective, it's probably, and I don't know this for sure. I haven't worked in a bank, but my suspicion is a lot of banks are treating these as infrastructure loans, similar to what they loan for plants, power plants, electrical grids, 10 years before you see your money coming back, Um, I think it's very probable. And to add to this, SpaceX said they weren't going to go public until they had a colony on Mars, but here we are. And their business model has totally changed as well. If you actually listen to what Elon's saying now, they could be ignoring him and doing what they're continuing to do. But I think that both of these IPOs, it's out of necessity. They need the money and they can't get it anywhere else. And I think there's good reasons behind that. We talked a little bit about Klarna, who's very much regretting firing their entire customer support staff and replacing it with AI chatbots. That is my biggest bear case, is that these companies are looking for exit liquidity.
Yeah.
And it's why they have these absurd valuations, which if you listen to someone like Patrick Boyle, who's worked in hedge funds for decades, he tells you it's the most absurd IPO he's ever seen valuation. because it's not about the future of the company. It's about getting investors' money back. And I'm pretty pro, space flight. I'm pretty pro space mining. I'm pretty pro, developing the tools that advance productivity. I think, and I'm curious to hear your case as we close out here. I think this is a bid for exit liquidity.
Yeah. No, to be honest, I don't know. It could be. I keep my mind open to any possibility. It absolutely could be. I mean, I tell you this though, like just listening to some of and reading really some of the stories and like, because SpaceX is a bunch of company. I think he wants to merge a few different business units all into this. I had heard something about Tesla potentially merging and lots of like rumors and things flying around,
Mm-hmm.
but he'll make a lot of money.
And he has a habit of doing that. I don't know if you've noticed, but
Yeah.
every time he's concerned about the price of his Tesla shares, he muddies up someone else's balance sheet. He
It's
did it with
amazing.
X. He did it with, he wants to do it with Tesla. Did it with SpaceX. Every time that it seems like there's an issue around Tesla, there's an acquisition.
Yeah.
So I wouldn't be surprised at all.
Yeah, me neither. It's going to be really interesting to see. I'm actually looking forward to it. I ended up stopping out of a position, but I had a position in Firefly. I look at Rocket Lab and like the whole space theme is pretty amazing to me. And I was explaining it to my wife again because she's just starting to trade. I'm like, yeah, they're talking about building data centers in space, and like that's like a real like that's literally what we're talking about. It's just a crazy time to be alive, Tyler. It's just really wild. Like some of the things that we're talking about, like we're
Yeah.
what 2, 3, 4 years away from AGI. We're building data centers in space. And I watched The Matrix the other day, and this is how it started. Like I forgot that The Matrix is actually about AI. Like they call
Yep.
it out. They're like,
Yep.
yeah, there was a time in the past where we created AI. I was like, whoa, that sounds familiar. So I don't know. I think it's going to be an interesting thing to see. It's beyond my pay grade in terms of how it works out. I know someone, like they always do, is going to make a lot of money. And most people, like they always do, are going to get washed. And it's just the tale as old as time. You really have to just kind of be careful and manage risk to the best of your ability and don't get caught up in like you said, being somebody else's exit liquidity. You have to be and do your own due diligence. And I think ever since COVID, Americans have been really kind of on that train. Like, hey, we have to look out for ourselves.
Yeah.
No one's going to look out for us. No one's going to care about your family more than you. So do your homework, do your due diligence, read, look at charts, create rules for yourself. There's one thing, if anybody's listening to this and like, hey, one thing that George says, have rules to buy, have rules to sell, most importantly, but have a way out. So I think as long as people do that, they can be safe and, feel more comfortable just watching the fireworks show next to me, right? Other than being the firework.
I think that's a great way to end this. George, thank you. You've been a gem. Thank you for coming on the show and talking with me for an hour and a half. It's been very, very fun. It's flown by. Thank you, everyone, for watching. We didn't say this at the start of the show. We probably should. None of this is financial advice. We are just two dudes who are interested in this. Obviously, before you make any financial decisions, please, please, please consult a licensed professional advisor. Stock trading always has risk, and if you're not careful, you can be harmed by this. So, thank you, everyone, for listening. Thank you again, George, for joining me, and I will see all of you next time. Bye now.